Wow, right?
Yes, yes. It's a double-edged sword, so I won't count my chickens yet.
I know. It takes a little bit of time. It's a process, but
Mhm.
you guys are all doing the work, so that's amazing.
Yeah. Yes.
All
So
right, I'll let you
be
ladies take it
consistency.
away.
All right. Let me go ahead, Nikki, and I'll keep
Awesome.
letting people in here.
All right, so I have actually wonderful news on a Monday morning. Now, normally we see some volatility from rates on a Friday, and that'll kind of like spill over into Monday. And Monday's not really a big fluctuation day, normally. But um, over from last week when Trump picked the Treasury Secretary, Scott Bessent is his name, and he comes from a place called Key Group, which is a hedge fund he founded. And he seems to be, from what all the experts are talking about and all the economists are saying, that they're referring to him as what's called even-handed. And it may basically what that means is that he's not as aggressive as Trump would like him to be, but he's also not as conservative as the last 4 years have been from a treasury standpoint. And so since he's really going to be in charge of really signing the money and being in charge of that, the market has responded extremely favorably to this pick for the Treasury Secretary, and therefore the 10-year Treasury bond has gone down as far as from a value standpoint, which means that mortgage interest rates have gone down. So we went back down below 4.3 to 4.29 this morning. We're kind of just going to ride this wave as long as possible. I'm sure, we'll get some volatility in there. A huge week in the market coming out, even though it is Thanksgiving week. We've got PCE numbers, we've got inflation, we've got CPI, we've got job reports. All these things are happening this week right before the Fed meets next week. So we've got a lot of things that are happening right now and a lot of numbers that could fluctuate up and down. We are expecting a slight increase in inflation year over year, or that PCE number year over year. But when I say a slight increase, I mean 0.1 to 0.2. So nothing that's really going to hurt the market in a huge way. But it is something that we'll just kind of keep an eye on as we head into the holiday week. So good news for a Monday morning. We'll see how long these rates can kind of, push a little bit further down. For a 30-year fixed interest rate right now on a conventional mortgage at about 20% down with good credit, you're looking somewhere around the high 6 to low 7 range, as far as depending on if you want to buy points down. So that's kind of where that market is sitting right now. From an on the street standpoint, I've actually been contacted 4 times in the last 2 weeks about someone purchasing a home on a contract for deed versus actually purchasing the home traditionally with a normal purchase, sell, and buy. And so I just wanted to kind of go over from number one, a lending standpoint, what happens on the buy side, and also what happens to the seller's mortgage if they do decide to enter into a contract for deed with someone else. So first and foremost, if you have a seller that is willing to sell their home on contract for deed, what this means is that they are basically lending their money from that home to the buyer. So what this looks like a lot of times is that the buyer will put down a significant down payment that will come into cash for the seller and then either wrap on their mortgage, in other words, pay that person's mortgage, or pay the seller essentially rent for the purchase of the home, or a certain specified amount for the purchase of that home at a later date. So basically they're writing a contract or a contract that allows them to purchase the deed at a later date. So for example, if you are a seller, and I'm just going to use round numbers, let's say you owe $300,000 on your house and you're selling it for 500,000. You have a buyer that comes in and says, hey, I'll give you $100,000 down payment, and then I want to finance the rest of it. You can finance for them that full 400, even though you still owe $300,000 on your mortgage. You can finance the rest of that for them on a temporary basis until they can pay you back, until they can pay off the entirety of the home. So it's definitely a unique way for a seller to be able to sell a home. They will earn interest income off of that contract. In other words, let's just say they do it for 400,000 at 8% or whatever the percentage is, and the buyer is okay with that because they just aren't quite ready to purchase, or they want to purchase when interest rates go down or something of that nature. They can work out an opportunity to do that. On my side, from a mortgage standpoint, If you are a seller and you have a mortgage, you have a contract for deed on that property, the mortgage will still appear on your credit and you are still responsible for making those payments to that mortgage. So the idea being, it's kind of like an investment property, and the idea of like you're collecting a payment on the contract with the intention of selling it at the end, unlike when you rent to somebody. So just keep those things in mind. And when you are in a contract for deed, that seller or that buyer, I'm sorry, has to make 12 payments on that contract before we can exclude that payment on anything that that seller ends up purchasing at the end. So let me go through that again. Seller owes $300,000 on their mortgage. They have a contract for deed with a buyer. They want to buy a subsequent property. The only way they can buy that subsequent property, unless they can qualify for both mortgages, the only way they can buy that subsequent property with excluding that original $300,000 mortgage would be to have 12 months of payments, on-time payments on that contract for deed. So that's something to keep in mind. What I've seen done in the past is instead of writing a contract for deed, they will write what's called a rent to own. In the mortgage world, a rent to own is a completely different ballgame than a contract for deed. Contract for deed means it's basically you have to have 12 months of on-time payments in order for you to exclude that mortgage. On a rent to own, it acts just like an investment property. You do not have to have 12 months of payments. That rent amount has to cover the cost of that mortgage so that you are able to purchase a subsequent property. So something to keep in mind. Also, a lot of times I see this happening. A contract for deed will happen with family. So what usually happens during that is if there is a contract for deed that is family, sometimes there's like a gift of equity. And we can stack on contract for deed, stacked onto a gift of equity, stacked onto, seller paid closing costs, things of that nature that can really help families sell their homes in with gifts of equity, with contracts, et cetera, and really kind of make that a clean transition for a family home. And although I'm not a CPA, there are some tax advantages to doing gifts of equity with not having to pay capital gains. So keep that in mind for any sellers or any, buyers that you're helping facilitate a family purchase. It's really important for them to understand not only their options when it comes to either contract for deed or traditional mortgage, but it's important for family sales to understand how gifts of equity work, what happens from an accounting standpoint, and how it plays into any capital gains that they may have to pay. So,
Yeah. So you said about 4 or 5 people have contacted you that went into contract for deed. Would you, just from what I'm hearing you say, is that because they're trying to wait for the rates to come down, or?
yeah, so for example, one of them would be one good example is they can enter into a contract for deed at any time, but they can't get a mortgage because they filed bankruptcy a year ago.
Okay.
For example, that's a good example. Or they're waiting out a timeline for foreclosure. I had one where it was like they could qualify for an FHA mortgage because they had a foreclosure like 5 years ago, but they can't qualify for a conventional mortgage because that foreclosure was 5, not 7 years ago. And so they enter into a contract for deed for 2 years, waiting out that timeline, and then are approved to purchase after that. So it really just depends on, it's usually outside circumstances, or like you said, waiting for interest rates to drop. So like if you went into a contract for deed, for example, if I have let's call it 2.5% on my mortgage, and then I sell my home on a contract for deed and I'm getting 5% from that buyer, I'm making money on that interest, because the only interest that I'm paying is on my original mortgage of that 2.5, and I'm making more from an interest standpoint on that other contract that I have out there. So it's a little bit of a way to make some additional passive income and still be able to sell that property at the end of the day.
Yeah. Well, and in that instance, it's almost more beneficial for it's beneficial for the seller. Whereas I feel like contract for deed, in my mind, it's always been because of those outstanding circumstances that the buyer can't right now qualify. So that's a little bit spinning it towards the seller side. I love that.
The advantage, I think, is like the real advantage of it is why would you do a contract for deed versus rent? Most
Yeah, I
of
was
the time,
just gonna
contract
ask.
for deed ends up with some initial equity. So a lot of times someone who enters into a contract for deed, a buyer will put a significant portion down on the home up front, or put that down payment that they're going to need to put down anyway on that contract right away. Whereas with a rent to own, you're allowed to collect a security deposit and some, in a 1 month rent, but you aren't really collecting a larger sum in order to do the rent to own, if that makes sense.
No, it does. That was my next question was what is the main difference? So, from a lending standpoint, or if someone was to come to you with both contracts wanting to buy, what is in favor of the buyer?
So the reason a buyer would enter into a contract for deed is number one, a lower interest rate. Number two, they get to set their purchase price. So in other words, they're purchasing the home for 500,000. A year from now or 2 years from now, when they have that contract ends, they're still purchasing it for 500,000, regardless of what the equity of that home has done. So it can be an advantage to a buyer in that way. It can also be an advantage because they could secure a lower interest rate than what's available in the market. So if someone comes to me and says, I want to facilitate this contract for deed, it's my job to make sure that at the end of the contract, from what I can tell now, at the end of the contract, they'll be able to secure a mortgage, a traditional mortgage at the end of it. So what are the things that need to happen? What are the things that we can put in place so that at the end of that contract, they're going to be able to secure a mortgage? And most of the time, I'm babysitting contract for deeds for at least a year, making sure that nobody goes out and purchases something, like a car, or making sure that they keep up on their credit score, making sure that they, are doing what they need to do in order to make sure to, have that ability to eventually purchase that home.
No, that makes perfect sense. And yeah, it is helping out the buyer. So as a real estate agent and agents on this call or listening to the replay, if we have buyers that are in that situation and maybe the seller, it's listed on the MLS, it's been sitting for a while, but it doesn't say anything about contract for deed. How do we go to have that conversation with the listing agent, or is that something we'd get you involved with, or what would that look like if we wanted to see if that was a path or an option?
Sure. So I think the most important piece is for the buyer to understand what they're getting into from a contract standpoint and what that looks like long term for them. Because in a contract for deed situation, let's say you write the contract for 24 months. They have to purchase it at some point within those 24 months. The buyer has the opportunity to purchase it at any time within those 24 months. So really it's getting a realistic viewpoint of saying, okay, we're going to sit in this contract at 6%, let's call it, for 12 months. We know we're going to be in it for 12 months. Nikki, can you help them understand, like, at the end of 12 months, what does this look like for them from a financing standpoint based on today's interest rates? What's the advantage of the contract for deed? And can there be a negotiation that comes in that's advantageous for both parties? The seller gets to sell their home. They get a significant down payment right away, or a down payment right away, and the buyer has a vested interest in purchasing that home at the end, because if they let the contract expire, they lose that initial down payment. So that's important for them to know as well. But just make sure that in financing, when that contract is done, that in financing is as secure as it can be, given today's market and where the client is at.
Yeah, I love that. I know at the beginning of my career, this was all very confusing. So I just want to open it up for questions. And I'm looking on the live stream. I don't see any, but any agents on the call here that showed up, do you have any questions for Nikki or any clarification? It's a great topic and one that's very timely. I don't see any coming through.
Yeah, no questions, but I just want to make a comment and more like validate it. This is my theory. So this was all like short term, but I think based on what I'm seeing, and the basic principle being that, the inflation is caused mainly by the government spending. And I think I think the target that I'm seeing is that 90% government spending reduction by July 4th of next year. And, imagine what will happen to inflation with that kind of government spending reductions. So this will be a great time to buy assets, because when interest rates go down, we know all the asset prices increase tremendously. So, this is a very good time to buy very, very aggressively, in my opinion.
I would agree with that. Yeah, absolutely. We talked about, a couple months ago, we talked about this like 90-day window between, when the election happens and when we're going to start to see interest rates going down. And if you can time it in between that time, especially with the Fed meeting and them continuing to drop those interest rates, if you can time it right, the more important part for the next 90 days is the price of that home versus where those interest rates are sitting, because those are going to continue to go down, but the price of that home is only going to continue to go up. And so it's easier for you to refinance into a lower interest rate after 12 months or after 6 months or however many months that means. It's not as easy for you to say, I can spend $20,000, $30,000 more on a home. And so these next 90 days, or like you said, all the way to July, it could be, it's important to just concentrate maybe more on price right now than it is on interest rate necessarily.
Yeah. And this is, investment case, but also if you think about it, if you weave that story in front of your buyers, how greatly motivated they will be to buy now, right?
Yep.
So that's what I wanted to say.
Yeah, I agree.
Yeah, such a great point, and thank you so much, Raul, for bringing that up, because come springtime, everyone's talking about how people have been sitting on their hands real estate wise. So the intention is, and what people are talking about is that it's going to be a very active spring, which means a lot of buyers, a lot of competition. And so on both sides of the fence, it's a really good time to be looking at buying or selling or investing. So I love that. Yeah. Great. Well, good. Well, I really appreciate you all being here. I know you had talked about a little bit, Fred, it's a shorter week. So I encourage you, if you haven't already, to the month of gratitude, give gratitude to your past clients, your current clients, your family, the people that support you in your business, and just really take this time to let them know that you see them, you hear them, and you appreciate them, and you're grateful for them, as I am grateful for all of you. So I appreciate you.
Yes.
All right.
I love it, you guys. Great week to, such a great week to touch base with people. People are around, they're in a good mood. Show your gratitude, ask if they need anything that you can help them with in the new year. One script that I've used in the past that has worked really, really well is asking people like, do you have a goal for the new year, and how could I support you in that? Or do you really just looking to them as an entrepreneur saying, look, life or business goals or any other goal, what is it that you want to achieve for yourself or your family in the new year, and how can I help you? How can I support you? Is a really interesting conversation with past clients, current clients, other vendor partners, referral partners, like really deepening that relationship. And then of course, putting it in your CRM or writing it down so that occasionally through the year, you could check in with them on that. What a really easy way to keep in touch with people in a meaningful way, where they would be like, wow, you remembered that I was trying to do ABC. I'm not quite there yet, but I'm working at it. Thanks for thinking of me. How many people would actually go above and beyond to do that? And we're in a relationship driven business. So anything that we can do to genuinely help people and build that relationship will help us build our business. So it's a great week to be doing that. Even next week, if people are having kids out of school, it's just a great time to do it. So don't let your foot off the gas pedal. Definitely take time off with your family, but realize like you have the first 3 days of this week to really make an impact, double down, and then take some time off and then get right back at it. What we do right now is creating the momentum for the new year, and will really, really help you be having the levels of success that you want to in early 2025. And it sounds like, we're going to continue to be poised to have those opportunities based on rates and everything else. So really, really good information today, Nikki. Thank you for sharing that. You guys remember, if you want to go back and watch this, it's live streamed in EXP Family Tree, so you can watch it or tag your friends who weren't able to come live. There were a number of people watching us live as well. So thanks to you guys. And then of course, you can find this on Angie's YouTube channel, which is AG Coaching. So just go to YouTube and type that in. Thanks, ladies. Happy Thanksgiving, everyone.
Happy
Thanks,
Thanksgiving, everyone.
Happy Thanksgiving.
Don't work too hard during Thanksgiving, okay? Happy
All
holidays.
right. You too, Raul.
Thanks,
Bye.
Raul.
Thanksgiving. Take care.